Well, joining me now is Gilles Moec, an economist at Deutsche Bank. Welcome this morning. Germany really not feeling great. What is actually stunting this recovery? We've been talking about the weather, but surely it's not all about the snow, is it?
It's not just the snow. There seems to be a complete reluctance by German consumers to actually open their wallets, which is quite surprising actually, because it is one of the only countries in Europe where unemployment has basically stayed where it was before the recession. So it's not really the deterioration of the labour market which can explain it. It's also the only country in the euro area where there still is a stimulative fiscal policy, which should also prompt households to spend a bit more. So probably what is happening right now in Germany is an illustration of what we call a Ricardian equivalence, a situation in which households react to an increase in the public deficits by simply raising their own savings ratio, so that in the end the impact from fiscal policy and domestic demand is extremely subdued, and this is definitely what's happening right now. So
when consumers are being cautious like this, it's difficult to create spending.
It's difficult to create spending, but Germany is very fortunate in this general misfortune. It is very dependent on exports, and for the time being, exports are doing quite nicely. We've had a very strong contribution from the net exports in the fourth quarter. Yeah. The IFO survey, which was in general not as good, you mentioned it at the beginning, was actually still quite favorable in the manufacturing industry, which is of course very dependent on exports. And we now have this correction in the euro exchange rate, which should help. So what we have in mind for Germany is a kind of very unbalanced growth, relying heavily on exports, not so much on domestic demand, but growth indeed.
Now, the government stimulus, we just touched on the government stimulus in Germany and France, they will have to be cut back at some point to get their finances in order. Are they ready for this yet?
Well, Germany actually has a bit of time. The European Commission said that Germany was allowed to continue with its stimulus in 2010. The level of the deficit is still manageable by the current standards. Right. We know that there will be some consolidation, probably not this year, not even next. France is not exactly in the same position. It has quite a big deficit, 8.2% of GDP. It will have to address it. The problem is that there is for the time being only lip service to the idea that there is a need for consolidation simply for political reasons. There are important regional elections in March. What we expect is announcements of concrete measures after the elections, so sometime in April.
Right. Now, we've also seen in France a steep fall in consumer confidence. Yes. What are the prospects for growth there?
Actually, it's not in as a favorable position as Germany, because even if there's a global turnaround in global trade, exports matter not that much for the French economy. So if you lose the support from consumer spending and you don't get such a strong boost from exports, you're in the middle of quite a problem. So our view for France is actually of a very subdued recovery in 2010 with GDP growth at around 1%, which would be basically half of where France used to be before the recession started in terms of potential GDP.
Axel Weber was talking about growth really only happening in 2011. Just briefly, do you agree with that?
Well, the issue there for 2011 is that it may be the time when everyone will start consolidate public finances, Germany, France, all of the peripheral countries. So the problem behind this is that at the time when, yes, things are ripe for an improvement, it's exactly the time when governments start to really be serious about fiscal consolidation, and that would impair even longer the recovery in domestic demand. So we are also quite prudent for 2011 with GDP growth at around 1% too.
Gilles Moec, thank you very much indeed for coming in this morning.